Good morning. Welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. And today's topic is an insight into managerial remuneration part 2. It's a we can say compulsory part 2 because last week it was not completed and there were so many questions. So same, we have our presenter Ms. Sakshi Gupta and our today's panelist is CS Mansi Lahiri. Mansi is a seasoned professional with 18 years experience in corporate secretarial and compliance functions of large listed companies and NBFC. She is a company secretary and law graduate with experience in SEBI, RBI, complex corporate transaction, ethics and cost matters. She is currently company secretary and compliance officer at Mahindra Holidays and Resorts India Limited. She also held senior secretarial roles with Grasim Industries Limited, Vodafone Idea Limited, Blue Star Limited. She has extensive experience in several strategic high-value corporate action, including QIP, right issue, preferential issue, merger, demerger, scheme of arrangement, ESOP, issue of NCD, CP. She has also led initiative for digitalization of governance process, including implementation of board meeting platform, insider trading, compliance tools, RPT monitoring system. She is active member of ethics committee at Mahindra Holidays and was chairperson of cost committee at Mahindra Finance. She is recognized for bringing her ability in bringing strong governance and compliance-oriented approach to listed company secretary and compliance function. Welcome, Mansi. Thanks for your time.
Thank you. Thank you, everyone. Good morning, everyone. Let me begin with a light confession. Whenever the word remuneration appears on the board agenda, two things
Mansi,
usually
just a
happen.
minute. I will give you the opportunity once I finish the introduction.
All right, sorry.
Okay. Today's presenter is Ms. Sakshi Gupta. Sakshi Gupta is an associate member of ICSI and is Bachelor of Commerce and Law. She has worked with MCX and has experience in incorporation of LLP, increase in capital, etc. I am not mentioning LODR and all that. And as usual, our moderator, Mr. Bala, who is always there with us, now no need introduction to him, and Sudhakar, both are well known. MD remuneration, honestly, as I mentioned last week, I thought when started that it is all settled, so it will be we will able to finish in in one session. But surprisingly, so many queries were there, and we were not able to finish. At 1:15 also, we were left with 80 questions. So we are going to first attend today that questions and then our balance presentation on LODR for MD remuneration for listed company.
I'll make a small suggestion. Let that, in fact, yesterday I discussed with Sakshi also. She will give a recap of what we discussed last time in 1 or 2 slides. After that, she will complete the presentation. Then we will take up the last time questions as well as current questions.
Okay. With this, I will request Mansi to say a few words on the topic. Then Sudhakar, then Mr. Bala, and then Sakshi, you can start the presentation. Over to Mansi.
Good morning, everyone. Let me begin with a light confession. Whenever the word remuneration appears on board agenda, two things usually happen. First, everyone suddenly becomes very serious. And second is, everyone secretly becomes very interested. This is because remuneration is one such topic where numbers are public, emotions are private, and opinions are unlimited. In today's governance environment, remuneration is no longer about how much it is being paid. It is more about the message that the pay scale is sending out to the shareholders, employees, regulators, and society at large. So thank you, Mehta and Mehta, for bringing us together to discuss a subject that sits right at the heart of the modern corporate governance. There was a time when remuneration decisions were relatively straightforward. If the profit increased by a certain percentage, remuneration increased by a certain percentage. If the profits declined, the answer was like, maybe perhaps we'll be doing better next year. But in today's world, the stakeholders are not satisfied with the profit only lens for the managerial remuneration. They are asking sharper and deeper questions. Is remuneration linked to the real value creation? Is it aligned to the market capitalization? Is it in sync with the long term strategy? Does it reflect the responsibility towards risk management, people, sustainability? To put it in a very simple words, remuneration has now become the reflection of the governance maturity of an organization. There has been a major shift in the growing influence of the proxy advisory firms as far as the managerial remuneration is concerned. Today, we see the proxy advisors are asking various questions and are raising various concerns, some of which are like, if the profits of the company has increased by the X percentage, then why the remuneration is increasing by Y percentage? Now, this is typically not an opposition to the remuneration, but it is like they are demanding clarity, logic, and fairness for the quantum of the managerial remuneration. The concerns raised by the proxy advisors also include, why is there no cap on the ESOPs that are being awarded to the managerial personnel? There are vague and undisclosed performance metrics. Why there is a weak linkage between the performance and rewards? And what is the justification of the excessive pay given the performance metric of the company? Proxy advisors are also seeking, is the remuneration inflation adjusted? Is it crisis sensitive? Is it peer benchmark? So, if I say, looking at all this, remuneration is just not being evaluated as it was being done previously in the previous era. It is now being interrogated. There are certain recent examples in the Indian corporate governance sector and the shareholders, where the shareholders and the institutional investors have depicted how seriously they are taking this issue. Let me put forth one such example. Without naming the company, I would say that there was one listed entity, reputed listed entity, a promoter driven entity, which had put forth its MD remuneration to the vote at the shareholders meeting in the era of the pandemic. There was a case of like 10% increase in the MD's remuneration, whereas the median employee remuneration increased roughly around somewhere 1%. So then the questions were raised. Why this disproportionate increase in MD's remuneration, given the challenges the company is facing, and also considering the median increase in the employee's remuneration? The outcome was simple. The resolution failed, and the institutional investors also voted overwhelmingly against this resolution. In this case, we see the powerful message that was being delivered was that even the respected leadership and the promoter reputation cannot substitute governance justification. There was also one other company, another listed reputed company, wherein the proxies also questioned why the remuneration higher than the peer remuneration levels, why there is no clear disclosure on the performance metrics, why we are not having the clawback clauses. So we just see now that remuneration is not being viewed in isolation, it is also being judged with the overall governance context. Let me turn to some forward looking trends. Leading companies globally and in India, like example Nestle, are now linking their leadership. Mahindra is also one such company. We are now linking our leadership pay with the various sustainability targets, safety performance, carbon reduction goals, human capital outcomes. This is a fundamental shift in my view. Leadership accountability is now just not being restricted to the profit and loss statement. Globally, companies are increasingly reducing variable pays where fatal accidents occur, serious safety lapses happen. This reinforces the commitment towards the not only towards the financial success but towards the overall corporate governance as a metric for the managerial remuneration pay. Let me now briefly touch upon the practical pain points. Some of the Indian companies also face statutory profit link limits. This is a typical scenario where the remuneration is linked to the profits. So, in such cases, the remunerations, while the profit may be subdued, remuneration would be higher, as the would be higher, and in this case we may typically have to look forward to the disclosure that we make to the shareholder. That plays a crucial element to convey to the shareholders why this kind of a remuneration is required to be paid for making the company turn around in view of moving towards the having strong market valuation, and given the complex strategic responsibilities. The key question that we are now asking is not how much that we are disclosing, but how convincingly we are explaining the remuneration outcomes. Ultimately, remuneration is not about defending numbers, it is about stakeholder confidence. The companies are also moving from a single metric valuation to a multi metric valuation, wherein digital transformation, cyber resilience, global leadership capability are also being considered as a long-term value creation pillars. With this, let me summarize my thoughts onto the managerial remuneration. Managerial remuneration today has become the litmus test for corporate governance credibility. The boards and the companies which treat managerial remuneration as a routine compliances may face resistance at some point of time. The boards which will treat this as a strategic governance lever will build a lasting trust. I now look forward to an engaging discussion with my fellow panelists and participants on this. Thank you.
Thank you, Masi. Well, it was wonderful presentation.
Thank you.
Very, you've given us different outlook to the participants with the sharing your practical experience. Thanks a lot. Over
Thank
to
you.
Sudhakar.
Yeah, thank you, Dimti. In fact, well articulated, Mansi, in fact, taking forward what you have said, the question is always in case of managerial remuneration, how much is too much and how less is too less. In the previous era, where the central government approval was mandatory, that point of central government used to take care of this issue of remuneration and that too much remuneration or too less remuneration because you have to have approval before making the payment. In the present act, this particular approval authority has been given to the shareholders. So, at the same point of time, in case of listed companies under 197(12), you have to also give the remuneration of every director, the ratio of remuneration of every director to the main salary of the company, so that this issue of how much is too much and how less is too less is also addressed here. Obviously,
Absolutely.
proxy advisories are there, they're alerting the shareholders, and shareholders have also become very active these days. And we have seen that in some big companies, the managerial remuneration has been declined, that approval has not been given by the shareholders. Apart from this, one or two major points, what we have discussed last week, let me reiterate that for the benefit of the participants who would not join last week but have joined this time, is that under 197, if you see the subsections, they have used the word public company at some places, a company at some places, and a listed company at some places. If you see 197 subsection 1 and 2, you will have the word public company. 197(12), they use the word listed company. And all the remaining subsections, the used is only a company. So there are two schools of thought is there here. One school of thought is that for the private companies, 197 is not applicable at all. Another school of thought is that 197, 1 and 2 are not applicable to private companies. 197(12), of course, is not applicable to private companies. The remaining sections are applicable to private companies. Means what? If a private company is making good amount of profits, they can pay whatever they want to pay to the managerial persons. But if there is no profits or inadequate profits are there, that is under subsection 3 onwards, of course they have to comply with the 197 other subsection related provisions. So it is up to the participants to take what sort of call you have to take it. So far, regulator has not faced any issue as far as this issue, this managerial remuneration percentages issues are concerned. But this is one issue which is to be taken care. At the same point of time, one more issue is that can a managerial person be paid over and above his salary and other perquisites or whatever it is at all? It is permitted. Suppose if a managing director of a company is a professional, he may be a tax expert, he may be a legal expert, he may be an IT expert, and if there is no prohibition about in his appointment letter or the terms of appointment, if he can render certain services and the company wants to avail the services, he may be paid over and above what he is being paid for the services he is rendering as a managerial person. Of course, for that there is a procedure is there that NRC committee has to determine that he got the expertise, whatever the qualification is required. It has to recommend to your board has to recommend to the shareholders, and a special resolution is required. So some people think that a managing director or a whole-time director cannot be paid any remuneration over and above the managerial remuneration, whatever is approved for. 197(4), subsection 4 allows you to make that payment, provided he got that expertise qualifications and he is rendering certain services like that. So I give a pause here, and then Bala may take it forward, and then as and when it is there, I will pitch in. Yeah, Deepti, sorry, you are there. Yeah, take care.
Over to Bala.
Good morning to all of you. I have a great pleasure in welcoming you all for the extended session from the last week to this week on managerial remuneration. As it has been said, every time we read the Act, we get the new interpretation, we get the new thing. That's what it is. As rightly pointed out by Dipti, also she said it's a well settled law. There is nothing, everything will go, which is not the case. Here, our panelists already explained a lot of things. There are two things I will touch upon here. Directors, as such, under the company's framework of the Act, they have the fiduciary duty to ensure they always work in the best interest of the company, and also balancing all the stakeholders, that is shareholders, employees, and other people at a whole. That is always there. Whether it's a private company or public company, it is there. Although today's policy of the government is not to interfere in the business. You run your business according to you, but to comply with the regulation. That's all. We don't want to interfere how to run the business, what to pay, what not to pay. It is all left to you, the owners of the company. That is why the things shift what Sudhakar has touched upon. The government approval has been shifted to the shareholders' approval. That is one thing. And second thing is, as rightly or Sudhakar said, can you pay over and above the salary? Yes, we have cases actually, but that time, of course, it was under the regime of the government approval. We had one of the executive directors who was actually expertise in marketing department. That time we were actually exporting to some of the neighboring countries, where our own parent company was also supplying material to other companies, but at the same time, we wanted to increase the export. We availed this particular full-time director who has the marketing ability to survey, understand, submit a separate report to increase our sales actually. In such cases, we did pay, but of course, it was paid as a professional fees to him for the services which have been rendered, subject to the approval of the central government at that particular time. So there are cases that there. Every time we interpret, as Sudhakar puts it, which section we are referring, when he touched upon very minute point, a company, a listed company, a public company, all the things are all calls for the greater interpretation to the company secretary fraternity. We always say that section 2 is very, very important, definition section. Then the interpretation of the sections is very, very important. Any given we undertake, that is what it is. As Mansi takes us through today, she will be touching upon the LODR related issues today, and then we will take up all the questions which are left out where last time, and further questions you may put up on the chat box as usual. We will address all those things. Over to Mansi, please.
Sakshi.
Sakshi, yeah.
Sorry, Sakshi. Sorry, I made a mistake. My apologies.
My screen is visible.
Yeah, very much.
Good morning, everyone. So today we are again going to discuss managerial remuneration as we've discussed it last time. So today we are going to first discuss in a very, I would say not in a very detail with respect to Companies Act, and then we'll move to listed companies, what we left last time. So this was what we started from last time. So out of this complete, we had discussed that the companies, on what type of companies managerial remuneration is applicable and what not. So for the listed companies was left. So today as well, we are going to discuss that it is not applicable. The limits under managerial remuneration under section 197 are not applicable on the private limited companies. It is applicable only on the public companies and the deemed public companies if they are the wholly owned subsidiaries. And obviously on the listed companies, limits are provided under section 197. And then it is divided into two parts. That is the profits. If the profits are adequate, then the profits are calculated as per section 198. And if the company does not have adequate profits, then it has to pay the managerial remuneration as per part 2 of schedule 5. And for the listed companies, regulation 17, sub-regulation 6 is applicable, which talks about the managerial remuneration. One second. Yeah. So we already discussed about section 196, but I want to touch upon some important points. What are there in 196? Read with along with part 1 of Schedule 5. 196 refers to appointment of managing director, whole-time director, or manager in the company. So all these together, managing director, whole-time director, or manager would be referred to as the managerial personnel thereafter. So a company cannot appoint managing director and manager together. They can be appointed for a term of 5 years. However, they can be reappointed for the another term. There is a age cap, which is like a managerial personnel cannot be appointed if he is less than 21 years of age and if he is older than 70 years of age. However, in case of person who is older than 70 years of age, a special resolution can be passed with a proper justification why the company wishes to appoint that person, then the person can be appointed as a managerial personnel. Also, a very important point which has been mentioned under Schedule 5 is that managerial personnel who is to be appointed in a company has to be resident of India. However, there is an exception to it that the companies who are registered under special economic zones, this condition is not applicable to them. And any non-resident Indian can be appointed as a managerial personnel in the companies in SEZs, but they should have a proper employment visas and they should meet all the requirements to be appointed there. Now we'll move to section 197, wherein the limits of the managerial remuneration are provided. So we had already discussed it in quite detail, but just to refer to it, I'll tell you that the overall managerial limit as provided is 11% of the net profits. If the company wishes to pay more than 11% of its net profits, the total remuneration we're talking about, not for one person, then it is required to take shareholders' approval, and the payment has to be made as per Schedule 5. Also, in case the prior approval of banks, PFIs, NCD holders, or secured creditors are required in case the company is a defaulting company. Now we move to the percentages for if there is for the managerial personnel, that refers to executive people. If there is only one managing director, whole-time director, or manager in a company, then company can pay up to maximum up to 5% of its net profits. If there are more than one managerial personnel in the company, then the maximum managerial remuneration company can pay is up to 10% of its net profits for all the managerial personnel taken together in the company. In the case of non-executive directors, remuneration to them would include, like, if there is, along with NEDs, there is a managing director, whole-time director, or manager is available in the company, then remuneration to NEDs can be up to 1% of the net profits. In any other situation, remuneration to NEDs can be paid up to 3% of the net profits.
So, Sakshi,
Yes, ma'am.
if we go back to this slide, I wanted to put forth one point for discussion and having, of course, the views of the other panelists and participants. We are saying that we can pay maximum managerial remuneration up to 11%. Beyond 11%, if we want to exceed, then it is subject to Schedule 5 Shareholders Resolution Special. Suppose I would like to put forth, without naming the company, there is one such listed entity somewhere in the year 2021, if I'm not wrong. They had taken the shareholders' approval for payment of managerial remuneration of, say, approx 17%. And say out of that 17%, that was a special resolution taken by them. Now, out of that 17%, if they pay 14%, suppose, say X number 14%, then should we, does this case require compliance with Schedule 5 of the Companies Act? Is something, because they have taken the resolution, they sought the resolution, and accordingly they were paying beyond up to 17%. And same goes for the commission. So it's like they were paying commission also beyond the permissible limits of 1 and 3%. In their case, it was 1%, basically. So then in such a case, Schedule 5 requirement to be adhered to, it would be compulsory to adhere to.
If you say, for example, take care of Reliance Industries, it's a huge conglomerate. They don't even pay 0.5% of the profits to all the executive directors. So what it's a government says is that 5% is a very reasonable remuneration to the managerial person, and 11% overall is sufficient. But what they say is that if you want to pay more than that, earlier we want to go back to the government for its approval. Now what they say is go back to the shareholders. Now when the shareholders are examining that, say for example, if one managing director you want to pay 17% as against 5%, then obviously they can apply their wisdom. If no benchmark is there, then they don't know what is to be paid to a managing director. Is it 10% justified, 15% justified, what is justified? No one has any idea about that. That is the reason for this.
Yeah, so Sudhakar, the thing was like, this companies have taken resolution like, little bit way back, like 5 years or 6 years down the line. 2021 is roughly the year what I quoted, but it could be beyond that as well. I'm not very sure. Uh, and this resolution is like taken once till the tenure it goes on, and it just keeps on dwelling onto this. So while I understood this is really helpful, and so we say there is one more issue on this 11%. Now, like if we say there is one more point of discussion here I have, uh, just we will quickly touch base on this about the sweat equity. Uh, See, ESOP's valuation, ESOPs, the granted, is considered in the 11% limit, 5% limit, 10% limit. How about the sweat equity shares? Should we be counting it under the 11% limit? Sweat equity may turn into an asset or may not turn into an asset. If it turns into an asset, relatively we can say that it may sit somewhere in the balance sheet, and we may have a little room to exclude it from the remuneration limit. But of course, yes, it's open to debate there also. And if the sweat equity is in the does not convert anywhere into the asset of and not sitting into the balance sheet, then should it be considered in the 11%, 5% limits?
See,
So,
according to me, sweat equity you will create.
hmm,
Correspondingly, you will create the asset also. Then only sweat
yeah,
equity can be issued, because sweat equity
typically.
you are issuing with a 0 rupee cost.
Hmm.
Because that there actually what it is happening is that whatever the asset you have to create, that equivalent amount of that you are giving a sweat equity.
Hmm.
Okay. So definitely that point of time when you are giving a sweat equity, you have to get the approval of the shareholders under a separate section. So
Hmm.
according to me, it is not a part of your managerial remuneration. Managerial remuneration is different to that of sweat equity. Sweat equity, you are giving it to the person concerned, whoever is the promoter. He is bringing some kind of an asset. It may be an intellectual IPR, it may be any other thing like that. For that, you are giving a sweat equity. It is not a part of his, what's called, you are remunerating him for his performance. It is, you are remunerating him for the value addition what he is bringing to the company.
So it can be, Sudhakar, considered as a person appointed with a technical capability for providing technical service, and you paid the services, that extra remuneration which is allowed under the section.
No,
Because
because the
this
certain
fellow is
It is, no, no, 1 minute, 1 minute, 1 minute. It is not remuneration at all. Sweat equity is not a
Hmm.
remuneration.
Yes.
Employee stock option is a remuneration. Sweat equity, according to me, is not a remuneration. Sweat
absolutely correct.
equity is you are bringing some kind of a value addition to the company, which you are taking it as an asset in your balance sheet. For that corresponding value, you are issuing the sweat equity, that is your on the other side of the balance sheet.
Hmm.
It is not a remuneration according to me. It is a capital
Hmm.
asset.
so
Dipti,
we are
Dip,
getting value for the what we paid. So there is
Correct.
no remuneration left for
Yeah.
that.
Yes.
Dipti, for certificate equity, there are specific conditions which are actually required to be met again. So when the specific conditions are to be met, then only certificate share can be issued. In such a cases, it doesn't come at all in the managerial remuneration at all. It is altogether different. It won't form part of the section 198.
No, this I think is perfectly perfect, because in ESOP what happened, because of his being employee, he gets certain remuneration as a discount or whatever it is. But in sweat equity, exactly the same value of assets is acquired by the company. So it's a kind of consideration other than cash. Yeah.
Yeah.
Sakshi, you have to now pick a buck up, okay?
Yes, sir.
Because we
Yes,
are already
Sakshi.
11:45. We have to deal with the
Yeah.
questions and all last time.
So,
And here also one thing I will add. Yesterday only I attended seminar, and in that ESOP and that limit was discussed. So I'll just add. I will forget. Ansul seminar was there. That in resolution you also put that any ESOP issued and option exercise the same means after remuneration it will be over and above. So if tomorrow option is exercised and it cross the limit, same is already approved by SERO.
so the net profits for this section 197 or for the managerial remuneration has to be calculated under section 198. We had already discussed that in detail last time, but I'll just tell you that for the 190, the whole list of items which can be either, for the income or the expenditures, which credits or non-credits allowed, or the deductions which are allowed or not allowed has been given under the section 198. So profit has to be calculated according to that. So any regular item would be allowed as a credit and the deductions would be allowed for the income and the expenditure. Any item which is extraordinary or which is not normal in nature has to be considered under this section as per section 198 and has to be seen that whether the credit of the same would be allowed in the incomes and the deductions would be allowed in the expenditure or not. So now we'll move to LODR. So under SEBI for the listed companies, for the limits, or I would say for the provisions with respect to the managerial remuneration has been provided under Regulation 17, Sub-Regulation 6. So Regulation 17 talks about that any fees or all the fees or compensation which has been paid to non-executive directors, including independent directors, has to be recommended by the board and to be approved by the shareholders in their general meeting. And the limits for the maximum number of stock options that may be granted to non-executive directors in any financial year shall be specified in the shareholders' approval. So here we have to see that the limits for the maximum number of stock options is for only for the non-executive directors. Since the independent directors are not entitled to stock options, it is only for the non-executive directors. And in case the sitting fees which is being paid to non-executive directors are within the limits as prescribed under Companies Act 2013, shareholders' approval is not required for the same. So for the non-executive directors, as we have discussed earlier, under Section 197, there were limits of 1% or 3% under Section 197. So here the limits are the same. However, there is one condition specific for the listed companies that in case the annual remuneration which has been payable to single non-executive director exceeds 50% of the total annual remuneration payable to all non-executive directors, then the shareholders' approval will be required. So this is referring to the limit of section, I would say 1%.
So, Sakshi just had a point here. When we say that annual remuneration payable to a single NED exceeds 50% of the total remuneration payable to all NEDs, then we need to take shareholders' approval for that financial year. It is restricted to that financial year. Now, the question is, when we say remuneration, are we going to consider only commissions or should we consider these sitting fees as well paid to the NEDs?
Sitting fees is altogether different. Sitting fees does not come under the managerial because sitting fees is
That
separately
doesn't
issued by
come
the
under the managerial remuneration, but here we are saying remuneration payable to NED. Hence, the question comes like, the remuneration word is used, not the managerial remuneration. So, bit of a question comes like, should we consider sitting fees here while calculating 50% cap to, because it's a remuneration, one kind of a view can be taken that, yes, one should consider the sitting fees payable because remuneration of NEDs typically comprises of two elements, that is sitting fees, commission, and ESOPs, if any, apart from IDs. IDs are not entitled to ESOPs. So just
Sitting fee
wanted
not to be considered.
Because one thing is very clear.
there is no clear guidance on this.
No. 1 minute.
From
See,
SEBI side also, but just thought
yeah.
of putting
When
it
we
forth for
talk
discussion.
about 1%, 3% commission, it is directly linked with the profit.
Correct.
It is 1% of the profit of the company, 3% of the profit of the company. That is what it linked with directly. So naturally, there is no question that forms as the remuneration. As far as the sitting fees is concerned, it is issued by a separate circular because for their value of the time they spend for participation in the board meeting, in order to compensate to them, the sitting fees is actually paid subject to the limit of that 1 lakh rupees or something, whatever it is there, which is fixed by the board. So in which case there is no way that sitting fees comes under the managerial remuneration category at all. It is altogether different. It will not form managerial remuneration at all.
There is a slight of a problem because the word is remuneration and not a
One,
managerial
we
remuneration, and
discussed in our
hence,
sorry.
mm,
We discussed in
sorry.
our previous session as well, like under Schedule 5th, it has been given that the professional fee or sitting fees would not be part of the remuneration.
But this is under so hence.
But we are referring managerial remuneration as
It's
per
SEBI
Yeah.
listing,
If we have to,
SEBI
but this
listing.
requirement under LODR of 50% cap, I'm speaking specifically for calculating the 50% cap as prescribed under LODR. So there, what is the intention of the SEBI is probably are they looking for an overall remuneration of an NED?
So I
That's
think,
how I'm doing it.
Mansi, you are asking that, yeah, seems that it is not included, but there is no clarification. But,
There is no
SEBI list.
clarification to
but
this.
Mr. Bala very rightly mentioned that for sitting fee is for board meeting. It is only
Yeah.
for board meeting as and when it happens. And
Yeah.
time given. And this MD remuneration for NED, they refer to percentage of profit for the remuneration. So that logic we can make. Yes, Sudhakar, sorry.
But in, yeah.
See,
Yes, Sudhakar.
what I'm trying to say is when you are talking about listing regulations, you have to read the listing regulations in alignment with the Companies Act also and vice versa. Unless until it has been specifically defined separately in the LODR, then of course definitely you don't need to go as per the Companies Act. Here, when they are saying about remuneration to the directors, it is nothing but managerial remuneration only. Companies Act, whatever has been provided, we have to take accordingly. See, because okay, that suppose if you add the sitting fees here, tomorrow the professional fee also to be added here. Under 197(4), I'm taking a separate approval for that. If you take that also, that is not correct. So professional fee is separate, managerial remuneration is separate, sitting fee is separate. So for this particular purpose, for the regulation 17 purpose, according to me, you don't need to add sitting fees here also here.
For some practical purposes, companies are considering that can be on a conservative side
If you
and taking
are
it like,
conservative,
yeah, where the
you want
promoter
to take it,
directors and
by
all
all
that.
means you can do it.
Yeah.
Absolutely, I agree with Sudhakar. No stretch of imagination, sitting fees never form a managerial remuneration because it is regulated separately by the ministry circular. This is definitely for the time they spend for attending the board meeting and the participation, etc., and other things and all. That is there, as you rightly say. Always we have to read in harmony with the Companies Act as well. Yes, I also agree with you. In case separately it is specified in the regulations, then we'll have to take care of it. If so long as it is not there, we'll have to actually read in harmony with the Companies Act. Yeah.
So
Yes, Sakshi.
suggest this correction in that our guidance note or any.
Yeah.
Yes, Sakshi, go ahead.
So then Regulation 17, Sub-Regulation 6 talks about the fees or compensation payable to executive directors who are promoters or members of the promoter group. It says that it should be subject to the approval of the shareholders by special resolution in general meetings if these conditions are made. So we have to see that the limits for the executive directors has been given under Companies Act 2013 under section 197, which is 5% or the 10% as we have discussed. However, there has been no limit for the directors who are the members of the promoter group or they are the promoters by themselves. So in case the compensation payable to executive directors, if the annual remuneration payable to such executive directors exceeds 5 crore or 2.5% of the net profits of the listed company, in any of the situation, it has to take the special resolution, approval of the shareholders through special resolution. And when there is more than one such director, which is referring to 10% limit, the aggregate annual remuneration should not exceed 5%. If it is exceeding 5%, then the shareholders' approval through special resolution is required. So here I would say that it is more conservative. The limit of 5% has been reduced to 2.5%, and the limit of 10% has been reduced to 5% for the EDs, but provided those EDs are the promoters or the members of the promoter group. And in LODR as well, it has been mentioned very specifically that the net profit shall be calculated as per Section 198 of the Companies Act. And there's one more important point, that the approval of the shareholders under this provision would be valid only till the expiry of the term of such director. So now there is just a comparison between the Companies Act and LODR for our easy understanding, that the applicability of Companies Act is only on the public companies and the deemed public companies as well. And LODR is for the listed companies. It is more restrictive. The overall limit under Companies Act is 11% of the net profits. And in LODR as well, the overall limit is same as the 11%. However, it adds the limits for the promoter executive directors. For the promoter executive director, there is nothing in the Companies Act. And in LODR, as we have discussed, it is up to 5 crore or 2.5% for the single executive director, or 5% for the multiple executive directors who are related to promoter group without the special resolution. For the non-executive directors, Companies Act provides the limit of 1% or the 3%. And LODR says that the shareholder approval is required for all the fees. And in case one NED is getting more than 50% of the remuneration of total NEDs in the company, then the special resolution would be required. In Companies Act 2013, independent directors are allowed commission sitting fees, as it has been there. And SEBI LODR talks about that the stock options is not allowed to them. So stock option is not allowed to independent directors under Companies Act as well, under Section 149, but 197 was not talking about it. And with respect to NRC committee role, for the public companies, it is mandatory for the specific public companies, more than the limits given under Companies Act. For the listed companies, NRC committee is mandatory, and the members of the NRC should be at least 2/3 of the person should be independent directors. So NRC role here is important because all the remuneration which has been paid to the managerial personnel, including directors, should be routed through NRC committee. Then with respect to the thresholds, and we have discussed about the multiple shareholders resolution. So just to summarize it over here, if the pay is to the managerial personnel is within the limits of Section 197, then the ordinary resolution would be there. And ordinary resolution is more than 50% in the majority in the general meeting. And however, if the pay exceeds the limits and provided under Section 197, and if the company does not have adequate profits, and it is referring to the limits of the limits given under Section Schedule 5, and it wishes to pay more than that, then the special resolution would be passed in the general meeting. Under SEBI LODR, for the promoter directors, we have discussed about the different caps, which is 5 crore or 2.5% of the net profit. Then the special resolution is required. It is important to note that if the overall remuneration is within the 11% of the limit, then as well special resolution is mandatory under LODR. And if the single non-executive director's pay is more than the 50% pay of all the non-executive directors in the company, then as well special resolution is required.
Sakshi, you brought out the very important issue of the NRC committee's role actually when it's come to the listed companies. In fact, if we see the latest circulars which have been issued by the LODR, SEBI, the responsibility which is actually cast upon NRC committee is very enormous, because it talks about skill matrix, it talks about the procedure, it talks about selecting the right people. All the thing has been there. And many times people keep on asking whether NRC approval will be required. See, no point of imagination, the committee is having an approving authority, committee is only having a recommending authority. Committee will go into the detail, they will actually evaluate, they will find out the evaluation, and then they will actually put up what you call the recommending authority to the board. Ultimately, the approving authority is only the board. The NRC committee is nowhere in the approval authority at all. But only thing is, when it comes to the committee approval, it is specifically mentioned the authority. For example, in case of the audit committee, the LOA there very clearly says the related party transaction is required to be approved only by the independent directors of the audit committee. If that is the case, in such cases, yes, the approval of the committee is actually called for. Otherwise, it is always the committees are recommending authority. That is one thing. And in case of the listed companies, the NRC committee plays a very, very important role when it comes to the selection, managerial compensation, recommendation, etc., and other things are done. Yeah.
So there are certain types of disclosures which companies are required to make in their board's report with respect to the managerial remuneration. So the listed companies, they are required to disclose in the board report the ratio of the remuneration to the median of the employee's remuneration and the percentage increase in the remuneration of the KMP and the median of employee remuneration. It is also required to disclose the number of permanent employees and their average percentage increase in the salaries for non-managerial staff as compared to the managerial staff. It has to be disclosed in a comparison format. And there also has to be a justification for exceptional increase in the managerial remuneration if there is any case of that kind. Also, the board report there has to be a confirmation with respect to the same that the company is paying remuneration as per the company's policy. The board report is also required to have a list of the top 10 employees in terms of the remuneration who are earning more than 1.02 crores annually or 8.5 lakh rupees monthly. Along with that, the employees who are earning more than the details of the employees who are earning more than the managing director or whole-time director, and they're holding 2% of the company share. The details of such employees are also required in the board report. Those details should include the employee's designation, their remuneration, the employment nature, their qualification, what is their experience, what was the employment start date, their age, last employment, equity shareholding, if any, in the company, and any relationship with the directors or the manager. Also, the employees who are posted outside India and they're earning above rupees 60 lakh per year or rupees 5 lakh rupees per month, they are not required to include it in the board report, but their details have been filed with the ROC. Those details should be readily available with the company. In case any shareholder required, they can request the company for those information before or after the AGM. Now, with respect to this, I've added 2 case laws here. So, in a company, Sushruta Medical Aid and Research Hospital Limited, ROC penalized the company for appointing non-resident director as MD without obtaining government approval. We have already discussed that under section 196 and in the part 1 of schedule 5th, it restricts the company to appoint non-resident Indian as a managerial personnel. So in case that has been there, then the central government approval is mandatory. However, there was an exception for the companies who are registered under SEZs, but this company was not registered under SEZ. So the company did not obtain the central government approval, and accordingly, it was a violation of section 196, for which the company was penalized for rupees 2 lakh. And that director who was appointed as MD, he also got penalized for the amount of rupees 50,000. Then again, in another case of Magnum Seafood Limited, the company and along with their directors were penalized by ROC for paying the remuneration to the directors beyond the prescribed limit under Companies Act 2013. So the penalty was imposed of rupees 10 lakhs for the directors' excess remuneration paid to the directors in excess of the prescribed limit, since the company had not obtained the members' approval. So this is it with the presentation. Now we can take the questions which were not answered in the previous sessions. I have collated them over here. So should we, sir, take this first or today's session questions?
No, we'll take the today's session first and then we'll go through the last sessions. Yeah. Today's session, let me start reading it.
Yeah.
Promoter entities and promoter himself are allowed to vote while approving the appointment and remuneration of the managing director through postal ballot.
Yeah, so can I take this?
Yeah,
yeah. So promoter entities, the director's appointment, MD's appointment, and his remuneration. Promoters can vote so long as the MD is not related. There, uh, there is no bar for restricting a promoter to vote on the MD's appointment.
In case the company is passing the resolution in the month of December, whether net profits to be considered on the latest audited or provisional financial in accordance with the section 198. Kindly confirm.
Balasa, if you have some different view or something.
No, in fact, when you talk about the managerial remuneration related to the particular year in which we are actually considering, there is no way of it is a last audited balance sheet or something.
Yeah,
Because not last audited balance sheet and all, whatever you said
that
is
can
only
be
for,
that
assumptions to
can be
saying
a
yes.
yeah.
Yes.
That can
So
be
here,
a guiding factor, and of course, the current years you can have an indication,
and
which can
another
help
thing,
you arrive at a remuneration that you
and
can
another thing is there in case of the listed companies, I think it has to be monitored on a month-to-month basis because every quarterly they are actually publishing the unlimited audited, the limited audit financial statement they are publishing every quarterly. It is readily available. You can actually add up. That is one. And again, at the end of the year, based on the auditor financial statements prepared, one has to actually compare with it. If that time with this things are required, then appropriately the resolution is to be taken from the shareholders. There is no way we can go back to the last year and take another thing and all. That is not correct things actually.
Sudhakar,
See, the question is whenever you are deciding the remuneration of a managerial person, that percentages and all you are taking it. These are only the guidelines only, whether it is the current profits or the last year profits and all. Because even if you take the 9 months profits in the next 3 months, there may be the entire thing may be wiped out also. That's why whenever you are passing a resolution, you have to also make a provision for that in case of no profits or inadequate profits. What you are going to pay to the managerial person, that you have to provide it sufficiently.
yeah.
At the same point of time, in case you are not done, but you are started making the payments, tomorrow if it turns out that you have made excess payment than what it is permitted as per the law, then you have to what's called as an okay, get the amount refunded unless until the same is
Waiver.
waived by the
Yeah.
shareholders.
Yeah.
Okay.
You may have to go for the waiver.
Under section 198, one specific deduction is unabsorbed losses. Upon how many years back the unabsorbed losses can be deducted? Can we take all the unabsorbed losses since incorporation of the company if it is exceeds 8 years? Request all the leaders here to explain. Since I'm not very clear on this point, the same problem comes for CSR as well.
basically asking unabsorbed losses can be considered up to how many years? Even from incorporation, though it exceeds 8 years?
All the carry forward losses are to be absorbed first. Okay. Right from the inception of the company. See, your balance sheet is carry forwarding those losses. Whether it is inception of the company or in between the company, whatever it is, whatever the carry forward losses are there as per your financial statements, you have to first of all take care of that.
Then only you are profit making.
Correct.
As
Yeah,
per
absolutely, you are correct. Absolutely, you are correct. But every year when you draw the balance sheet, absorbed losses are automatically carried over to the next balance sheet. So there is no question of keeping a track of 8 years and 10 years and 15 years. Question arises at any point of time when you look at the balance sheet, it is actually unabsorbed losses which is actually accumulated over a period of years. NRC also required to approve. Can we pay the remuneration in case the revised pay is under approval? I said actually, NRC is not the approving authority. NRC is only a recommending authority. That is one. Second thing is he saying, can we pay old remuneration in case revised pay is under approval?
In fact, Bala, one more thing also is when we are talking about NRC, as you rightly said, NRC is one of the primary responsibilities to formulate a remuneration policy. So in that remuneration policy, they have to address this issue of making the managerial remuneration payments in case of inadequate profits, what they have to do. That also is to be a part of that managerial remuneration policy. So the payments to the managerial personnel should be in alignment with the policy. Wherever you are deviating it, there should be sufficient reasons for that. Suppose if I am a director of the board, but not a member of the NRC committee, if something is coming to me, I will ask first as a member of the board, I will ask this question, is it in alignment with your remuneration policy or not? If they say it is not so, that means what? You are deviating from the policy. What is the rationale for the deviation of the policy when you are recommending it to the board by deviating the policy? Have you worked out the rationale for that? That rationale the board has to examine. Then only they have to approve that. And the same rationale they have to explain to the shareholders also. Because the remuneration policy, if I am not wrong, you have to upload that also on the website of the company. I'm not very
Yes,
sure. If I am not wrong, it has to be done.
yes,
So
it
it
is.
is a public document. So as a shareholder, I can always see the remuneration policy. If there is a deviation, you have to explain me the rationale for that.
Yeah,
Okay.
so
Yeah.
absolutely right, Sudhakar. We definitely here also like we follow this practice. While the proposals are taken, we definitely give a confirmation to the board NRC that whether it is in alignment with the remuneration policy or not.
Correct.
So basis that the further decisions are taken.
I think Mukesh Jain has expressed my view. Sitting fees would not be considered as a remuneration for the purpose of this computation. Yeah, that is absolutely correct. That's what we also discussed. From your discussion, is Schedule 5 is applicable when the profits are inadequate. If profits are inadequate, how can a company pay even the remuneration stated in the Schedule 5? In, in your view, the proposed remuneration exceed 11% of the profits. Such profits are inadequate for the remuneration proposed, and Schedule 5 is applicable. Schedule 5 is applicable when the profits are inadequate. See, Schedule 5, the slab is applicable in case of the inadequacy of the profit or loss-making profit. Even otherwise, profit-making company, the Schedule 5 is applicable, that 5%, 11% limit, which are actually applicable in any case. There is no question of Schedule 5 is not at all applicable. That is number one. If profits are inadequate, how can a company pay even the remuneration stated in the Schedule 5? Now, that is what the slab they put on, no, based on what is the effective capital limits. What are the things? That is what it is actually said. In your view, when the proposed remuneration exceeds
One minute,
11%,
Bala. If I understood the question,
yeah,
I don't know whether I'm just, imagining because the clarity is not there. Whether he is talking about the liquidity position.
Yeah,
Suppose
I
if
think
there are
he's
both,
talking about that. Yeah, yeah.
yeah. See,
So
liquidity
then,
is different.
yeah,
Profitability is different. So some people, they unfortunately they think that when the profits are not there, how can you make the payment? Or liquidity is a different issue. Payment is
liquidity is
profitability is a different issue. That means what? You are actually borrowing your funds from the bankers for your operational expenses. So this is also the same thing.
absolutely,
Yeah. Correct.
absolutely.
yeah, as you rightly touched upon, the liquidity is the question, but anyway, remuneration is payable. If not today, it is later. It has to be credited to his account. It has to be paid as and when the cash is available. That is the question. Yeah. Regarding remuneration, including everything, including the sitting fees limits is different, and the sitting fees will not be considered as the limits for the prescribed. That is absolutely right. That's what we also said actually. How to calculate a medium remuneration?
So for calculating the median remuneration, the we have to take the base of the employees for this year vis-a-vis the last year. Now, employees in this case, we take the employees. I'm talking a bit on a practical side, how it is being done, and of course, Sudhakar Valasa, you all can edit. So we consider the employees who were there in the employment of the company for the 2 full years. Uh, that is for the average increase percentage. For median, we just plot down all the permanent employees and we arrive at a median is the middle figure. We say average bhi nahi, the median is like if I have 10,000, then what is the salary of the person falling at the row line item of the 5,000 row. So that is what the median actually is. It's the middle figure. It's not the average. It's neither the comparison. It's just the salary of the person who is exactly in the middle of the entire list of the employees. So you have to plot down all your employees, their remuneration, and then just see which number it comes in the straight between. So that is how the
Absolutely.
median remuneration is calculated.
That is how it is to be worked out. Whether it is ascending order or descending order, it doesn't matter.
Doesn't matter.
So it is that the median person, where suppose, for example, there are 10,000 people are there, you have to take either the 49, 4,999 person or the 5,000 person or 5,001 person. That suppose if it is even, obviously take two people, then you average it out. If there is an odd figure, obviously it will be very simple for you. If there are 10,000 people, then 5,001 person is the median. That's how it is to be worked out. I agree with you. Policy.
Audit committee approval is required if the managing director is from the promoter group.
Yeah, if it falls under a related party transaction, yes, you have to take. Whether it falls under related party transaction or not, then you need to examine that.
SEBI LODR specifically mentioned the annual compensation of a NED, which is based on the net profits, whereas the sitting fees are payable for attending the meeting. If the director does not attend, they will not be paid. Yeah, that is again the clarification. Is there any exemption available for disclosure of the 10 employees?
For disclosure of?
10 employees. That means a board report disclosure. Is there
There
any
is no
exemption?
exemption for that. There is no exemption for that.
There is
I
no
think
exemption.
top 10 employees, yeah, no exemption.
No exemption.
Can promoter who are directors and also majority shareholders vote on their own increase of the remuneration in shareholders' meeting? Can promoter who are directors and also majority shareholders vote on their own increase of the remuneration in shareholders' meeting?
Only the issue comes in case of a listed company and if it is a related party transaction. Otherwise, whoever is the person, if he is the executive director, he can vote on his remuneration, not a problem.
So in listed company, it can, I think he's asking from listed company.
Yeah, that's what I say. So you have to see that because in case of a listed company, the related parties cannot vote for. So you have to see whether it is a related party transaction or not. Let us not discuss that here.
Yeah.
You have to see the facts and figures, then only you will be able to arrive at it.
17% total remuneration is the maximum, or it can be more. I don't know where from the 17% comes actually. In fact,
I think
11%.
that must have picked up from the example that I gave.
Yeah,
17%.
As Sakshi explained it, it is 11% in total for
11%.
executive or non-executive all put together. In case of the executive, it is 10%. In case of the non-executive, it is 1%, where the executive directors are present. Wherever the executive directors are not there, then the question of 3% will arise in case of the non-executive director. Is there any relaxation for the disclosing the detail of time? It's the same question again. There is no relaxations available. I think it will be the...
He is telling it is observed that many listed companies do not disclose these details in annual report, but it is non-compliance.
It is a non-compliance. In fact, there are cases people have taken, ROC has issued left and right orders that probably he has not seen. He has actually missed out. But once the ROC get into that, you will get into the problem. It is a requirement which is called. Even in the private company, it is called actually. I think it will be the previous year audited financial and not the provisional financial results. See, this is what Sudhakar also said. I also said remuneration is always for the particular year in which the remuneration paid. Profit is linked to that particular year. Taking a previous year and all the things only for, taking approval purposes for range fixing, etc. It is only a guiding factor, but it is with reference to the current year only.
Well, see, for example, you are deciding the remuneration for next 5 years. Previous year, you have sufficient profits. Current year, you have profits. Next year also, you have profits. Thereafter, you have losses. What you will do? So, for deciding a remuneration, that percentage and all things, it is only a kind of a guiding factor only. That's it. You have to see your future projections and all. You have to see that. And then when you are appointing and determining the remuneration of a managerial person, please do take the approval of shareholders in case of inadequacy of profits or no profits also, the shareholders for that particular purpose.
Can relatives of promoters vote on the reappointment of the CMD, who is 70 years plus, and the CMD is a promoter, executive MD of the company?
There should not be a problem.
As per section 187, the total managerial remuneration payable to a public company is to directors, including the managing director and the whole-time director and its manager, in respect of any financial year, shall not exceed 11% of the net profit of the company for that financial year, computed in the manner laid down in the section 198. Provided that the company is the general meeting may authorize the payment of the remuneration exceeding 11% of the net profit in the company, subject to the provision of Schedule 5. Subject to provision of Schedule 5 197, the company having a profit in the financial year may pay the remuneration to a managerial persons or their director or director not exceeding the limit specified in such section. And the overall limit 11% cannot be exceeded. Yeah, that is what he has given the clarification actually. He has also put the explanation to this also. That is what I think. So I think that's all. Today's session questions are there. Let us go back to the question which we left over in the last session. It is already appearing on this screen. We will go by one. Regarding a NRI status, If a WTD exceed 182 days abroad, do we need a central government approval mid-tenure?
So, if I
I
put forth my view on this, then
once you one thing, I think if this is a
Hmm.
question relating to the appointment of the resident director. Because when you talk about 182 days and other thing and all, it is
Or
regarding to
is
the
it talking about that WTD has become NRI during tenure? I read it that way, mid tenure. It's saying
Oh,
approval mid tenure. So then, if I put forth my view here, then it seems to me that it is not required because the requirement of one central government approval is required at the time of appointment if a director is not resident. There is no such mention that in case in between a director becomes a NRI, you need to seek a central government approval.
absolutely, you
So,
are right. When your appointment is taken, it is only at that time. That is absolutely
yes,
correct. If you relate to that, yes, it is correct. But if I look at the 182 days question, I think probably it is more to do with the resident director requirement. It's what it appears to be. That means, a resident director can be NRI, a resident director can be there, but necessarily he has to stay for 180 days in India. That is the question which I think actually. In both the cases, yes. 182 days, if it is a resident director, it is a must. There is no question of separate exemption, etc. and other thing and all. You must have, otherwise
yes,
it is a violation. But if the person becomes a NRI after the appointment, I think it is only at the time of the appointment, no separate approval will be called for. Or sitting phase, professional phase, commission, ESOP, and incentives included in remuneration. I think we discussed enough on this.
yeah.
Sitting fees and professional fees also are different. Commission, yes, it is. ESOP, yes, it is. Incentive, yeah, it is also is a profit linked incentive. It is there. So sitting fees and the professional fees is excluded. Does Schedule 5 apply only to ED, WTD or also to NED remuneration? Yes, Schedule 5 is totality now for 11%. Where is the question of only it approved for only ED and WTD? It is for overall everybody.
It is for overall.
It is 5% at 10% plus 1% or 3%, whatever it is.
Yes, yes, it's for all.
If a company voluntarily complies with the Schedule 5, even though it has the profits, will inadequate or profit will arise. If a company voluntarily complies with the Schedule 5, even though it has profits, will inadequacy or profit still arise?
See,
I'm not.
if
I'm
you
not.
voluntarily comply with Schedule 5 is applicable only in case of inadequacy of profit. So,
Yeah, if you want.
voluntarily compliance, even if you have adequate profit, I mean, I'm not sure. That is applicable only in case of inadequacy of profit.
So
No
I
proper.
don't know. He is telling that
No.
even though profit is there, they are paying remuneration as per the slab given for inadequate profit. So in some year, my profit is less than even that slab. Then in that case, whether inadequacy, that table will be. The moment it is inadequate, the table will be applicable.
I don't know when he put.
It's confusing question, honestly, not.
One more thing also, suppose if they want to pay managerial remuneration, they need not pay 5%, 10% or 11%. They can pay even 1% also. They can pay 2% also. I have given an example of RIL, Reliance Industries. Collectively to all the executive directors, not even 0.005% it is paid as managerial remuneration. So you don't need to pay the entire amount. So you don't need to touch the Schedule 5 slabs and all those things. Whatever the conservative side you want to pay to the people, you pay it.
Clarify why the slide mentioned both 11% and 10% limits for managerial remuneration. I think we
That's
talked this actually
covered this.
because the
Yeah, yeah.
overall limit 11% and 10% is applicable for the executive director,
Executive
1% is applicable to the non-executive directors. That is the distinction. If the appointment or reappointment of the MD and the remuneration approval related party transaction, RPT under Companies Act LODR.
Sudhakar
So,
mentioned that.
in fact, Sudhakar did mention at the time of appointment, it is not a related party transaction. After the appointment, then he becomes a related party. I think it was actually well explained there. So again, the question is here, you
But
have to take a.
if the appointment is of a promoter director, then I think we may have to look at it at a different lens. If a
Correct.
promoter is getting appointed as a managing director, then of course it's a related party.
Correct.
The Mansi that nowhere they have, if in case of unlisted company, they have not used the word promoter in
Correct.
section 2, subsection 76,
Right.
right?
Right.
That is the
Yeah,
reason
the
I said
question was
that
for
you have
unlisted.
to say
I
that
read
whether
it
he is a
from,
related party or
yeah,
not.
yeah. Under Companies Act, it will not. I agree.
Yeah. So please read
Yeah.
the guidance note on
No, the
related party
question was, I think,
transaction.
for both Companies Act and LODR. So I answered from the perspective of LODR, not from Companies Act. So, yeah.
In fact, in the RPT guidance note, this issue is discussed about managerial remuneration, approvals are required or not under the RPT. Please go through the guidance note.
If an independent director becomes a non-executive director, is any approval or cooling period is required?
No, it's not required in my view. Cooling period under the Act is prescribed only for the independent director's appointment again after 2 terms. There is no such regulation neither in Companies Act nor anywhere stated in LODR which says that which stops an ID from immediately becoming a NED. So ID can immediately become NED. Only the downside would be they would be losing the ID status.
Correct, that's right.
See, in
In an-
fact, in this case, that cooling period is there only if an ID as an executive director. There is a 1 year cooling
Yes,
period is there under
yes,
listing regulations.
yes, for
Correct.
For
executive director.
non-executive, for an independent director, after completion of the 2 terms, if he wants to get appointed as a non-executive, non-independent director, there is there. But proxy advisory firms are objecting to this. They say this is against the governance norms. So though legally it is permitted, but it is against the governance norms. They are not to be appointed like that because they are advising the clients to vote against such resolutions.
In an unlisted public company, ID appointed for a period of 5 years, then the second term of 3 years. Can the company extend the second term by 2 more years before expiry?
Should I give the answer or should I ask him to refer to the guidance note? I think I will do the second thing.
Yeah, I think that is a
थोड़ा
better option. Because
मेहनत करे गाइडेंस नोट पढ़ ले इंडिपेंडेंट डायरेक्टर्स का उसमें लिखा हुआ है
correct, absolutely, you are right. Because many forum we have been actually referring the excellent guidance note which has been brought out by the institute. Probably many people don't take advantage of it. So I think you should not
In
give
fact,
the answer. They should refer.
in fact, Deepthi and Bala, that off late, what I'm doing is I start answering questions like this in the webinars or in the conferences or seminars. I am asking them to refer to the guidance note. If still they are not able to find the answer, then you call me personally. I will clarify. Somebody has to take pains to understand this. You have to read it, not simply ask the questions and whatever the answers we are giving it, you are taking it as a Bible. This thing gospel truth, which is not so. Please refer to the guidance note. It is very clearly that.
Can we pay monthly remuneration to non-executive director or independent director? Yeah, nothing is prohibited. You can actually.
Yes.
If a private company appoints the
197
MD,
subsection 6 clearly provides this.
yeah.
Under 197.6, you can pay monthly remuneration.
Yes,
If
agree.
if a private company appoints an MD voluntarily adopting section 196, 197, 203, and later becomes the public company, his fresh approval is actually needed.
No,
According to me, not required.
not
You
required.
are already
According
complied
to
with.
even I am of the same view, not required.
Yeah, absolutely correct. If the Schedule 5 was voluntarily adopted, what happened to the conversion into the public company? No, if you are already adopted, you continue. There is no question arises at all.
Yeah.
Is there any time limit for the shareholders' approval after the board approval in the listed companies?
So 3 months, I mean, the question is for appointment of a director, is what I understand. So after board approves, a listed entity has to seek approval of the shareholders within 3 months or the next AGM, whichever is earlier. AGM or general meeting, whichever is earlier.
Yes, Sachi, you
Max time limit is 3 months.
If a person, an MD in a private company is appointed for the life, does he require a reappointment every 5 years?
Lifetime appointments are no longer valid. Is it for
Only you.
listed? 5 years, every 5 years we have to go.
This is not required for private companies, but now
Yeah,
this is
it's for
required for
private
listed
company. I
companies.
see. The question is for private, yeah.
Private company is not required, but listed company, because of that November 25th amendment, you require that even for the permanent directors also, for once in every 5 years, they have to get reappointed.
Or above 70 years, his appointment can appointment of the effective from earlier board meeting date. or above 70 years is appointed, can appointment be effective from earlier board meeting date? Now, I'm not clear what is the question actually.
Is the question like board has approved a appointment of directors, say May 24, who is already 70 years, and board says that appointment is subject to shareholders' approval at the AGM. So then what do we say there? Can the, matlab, is it right to say the director is appointed with effect to May 24 while your AGM happens in July 24 and director is already 70 years? Or it should be appointment date should be from the date or post shareholders approval, if I'm understanding the question correctly. That's what the question is. So
I think answered last time, Sudhakar, and he said that before 70 years, it's a prior approval. So you have to keep in mind.
Even if you appoint a person at the age of 68 and you are appointing it for a period of 5 years, because you're crossing that 70, you are hitting it in between. Unless until you have the shareholders' approval for that specific purpose, appointment of a 70 years aged person, it will not be valid resolution. So what you have to do is, while you are passing the resolution initially, you have to say that approval itself is sufficient even when he is crossing the age of 70 years also.
If
but
a
yeah,
deemed
there is one point is prior word is not written. Maybe probably that's why this question came under 196(3)(a). If we see, then probably prior,
If I
like
am not
in
wrong, if I
LODR,
am
it is
not
very
wrong, they
clear
said
for
that it is
75
with the
years.
approval of shareholders.
Yeah. So, like, if we see from NED's perspective under LODR, the prior word is very clearly written by SEBI. You have to take prior because there also, I think, some of the listed companies, I think Adani, if I'm not wrong, had taken a view that, prior word is not written. So, I have taken approval for NED after he got appointed, after he crossed 75 years. So, then I think SEBI went on to clarify that it's a prior approval, but I'm not sure what the intention was. But could it be because this question could be because the word prior is not written there, and hence the question could have arisen that could it be from the board meeting date or it should be from the shareholders meeting date?
It is from the board meeting date only.
It
Because
can
he
be
is
from
already
the
a
board meeting
director,
date.
no?
Yeah,
Yeah.
it can be from the board meeting date.
If the deemed public company pays remuneration to NED, what points must be considered?
Same compliance, 1%, 3% limits. If you have one MD, then 1%.
Even if you did deemed public company, it is as good as a public company for the
As a
compliance
public
purposes.
company, yeah.
If designation changes from CMD executive chairman and the JMD to MD without change of remuneration, is shareholder approval required again? No change of remuneration, there is nothing is there. It is only the board which changes the designation. You know, to simplify, DR told changing change of designation. That's all, nothing else. If only one MD exists, can NED receive 3%? No. Because the moment you have a whole-time director on the board, it is restricted to 1%. If the whole-time directors are not there, it is 3%. There is no question of having one MD exist and 3%. That situation cannot arise. If CFO is also an executive director, is he considered while calculating remuneration limits?
Yes, yes. All the executive directors have to be considered for calculating the limits.
Can a related party vote in a general meeting on resolution for appointment of the MD?
Yeah, we just discussed
I
this.
think we discussed this.
Yeah.
In a wholly owned subsidiary, if a director manager daily affairs but not designated as ED, WTD, will he still considered executive director? The wholly owned
Depends.
subsidiary. No, how can it be? Because if he's not the executive director, if you are actually getting once in a year something signed from him, he cannot become an executive director. He has to be appointed as the executive director as such. Unless he is appointed executive director, he cannot become by virtue of anything automatically the executive director. I think this also we discussed last time. Sudhakar explained it very nicely. Actually. Since the MD and the chairperson cannot be the same person, can MD act as a chairman of a particular meeting? Yeah, you have a choice.
Yeah.
Because the board can actually decide the particular, because many companies, they have either the permanent chairman or they select the chairman for meeting by meeting, that they do. That is depending upon the company's practice. Should CSR expenses be added while computing the profit under Section 198?
Okay, but where it is mentioned, since MD and chairperson cannot be the same person. ये कहाँ पे है ये? He
That's
can be
only
the
the
same person.
discretionary requirement. That's the only discretionary requirement under LODR, nothing else that.
The
Yeah,
That
okay,
LODR,
separate offices are maintained or not, but it's
yeah,
nothing,
yeah.
under LODR. It's not compulsory. Since
Should CSR expenses be added while computing profit under Section 198?
read Section 198.
If a company pays remuneration within the Schedule 5 due to inadequacy of the profits for financial year or later restated, will the remuneration become retrospectively non-compliant? If a company pays remuneration within the Schedule 5 due to inadequacy of the profits, but a financial year later restated, will the remuneration become retrospectively non-compliant?
But if it is inadequate or minimum remuneration, you have to pay in slab only. So if it further reduce, also same will applicable.
Yeah, correct. If you are actually going in an inadequate situation, according to the effective capital we are paying, there is nothing is going to change on that. Can sitting fees be paid to the executive directors? No, sitting fees are paid only to the non-executive director, not to the executive directors.
Yeah.
Since the Section 198 is used to calculate the profits for remuneration and the remuneration itself is an allowable deduction, how does the calculation work?
Remuneration is usually added back. It's added back to 198. It's not deducted while calculating the profits under 198. It has to be added back.
Can manager remuneration be structured as consultancy fees through a separate entity owned by the director?
No, the answer is no.
Yes, Sakshi. Next one. If remuneration approved for the 3 years under Schedule 5, but profit increase later, is the company restricted to that amount? No, if the profit increases, you come to the profit making situation, you can always switch over. The Schedule 5 compliances slab is only in case of the inadequacy or loss making company. Once it has become a profit making company, you can always switch over to the limits which are specified.
Bala, it all depends upon the way you have passed the resolution. Please check the resolution, how you have passed it. If that you are appointing that person only for 3 years only because of inadequacy of profits or loss-making company, you have passed the resolution only for 3 years remuneration as per Schedule 5, then when it turns into profit, then again you have to go back to the shareholders. So how pass the resolution is important.
Can a company give loan to the managerial person or vice versa? What about the interest?
Read Section 185.
Yeah, this question is not allowed in this section. You'll have to go to this section.
Then let him read Section 185. He'll find the answer there.
Since the financial close after the year end, how can the company predict the remuneration will not exceed the limits during the year?
I think
This
we
is what
just
you have to keep
answered
it
this. Yeah. We answered this during the discussion.
If a director become particularly sick or permanently disabled, can he receive remuneration for the past services?
Remuneration for past services. Remuneration would be paid to him. I mean, if you're looking from the other components of remuneration, like this, what we say, leave encashment, gratuity, PF, then of course that continues. But otherwise, remuneration is paid, managerial remuneration is paid for the services he is being able to render, he or she, whoever the candidate is, for that office. If they are disabled, then future payments cannot be made excepting the gratuity, PF, whatever has accumulated or is accumulating.
See, whether he is partially sick and he is
Partially sick,
permanently
I'm
disabled.
reading it as permanent disabled.
Suppose even if he is a permanent disabled, in what way? So people who are permanently disabled, suppose he may
Not
not be
able to
able to walk,
discharge
he may not be
duty.
able to do it, but
Yeah.
still he can render his services, you know.
I mean,
So
if
it
the
all
person
depends.
is not capable to render the services in that slab of a managerial personnel, and if the board is of that opinion, then I don't
If
think we
he
can
is in
continue to
service,
pay the, yeah.
no, 1 minute. Whether he is a permanent disabled or permanent sick or whatever, if the company is allowing him to continue in employment, you have to pay the salary. Whether he works or not, what doesn't matter. If he is holding the employment, you have to pay the salary, you have to pay everything.
No, we
Otherwise, they
can
have to
pay
terminate
salary,
his
but
service.
not in terms of the managerial remuneration, right? If
No,
the
no, why
person is
not?
If
Why
the
not?
person is
Suppose I
not
am a managing
able
director
to
of the company.
discharge the duty of a managing
Listen,
director,
listen, listen, listen.
hmm,
A managing director, he might suppose a permanent disablement is there,
hmm,
but he can always advise the company how the company has to function. He is able to
that's what
speak.
my yardstick I'm saying would be whether he's able to provide that service or not. If he is not able to provide that service, then probably managerial remuneration cannot be given to
According to
him.
me, if he is in a coma, of course, he cannot.
Yeah, yeah,
Suppose
that's where
even
the
if a
fix is.
person is in coma, terminate his services because a managing director position is not that simple a position. It is a very crucial position. So, under what circumstances you will terminate his services? Till the time he is in the employment, you have to pay his remuneration. The moment you terminate his services for whatever the reasons it is, you will not pay his remuneration.
Yeah, so it's clear if we
That
are
is the
not,
answer to this question.
yeah, yeah. So if board is of the opinion that the person is disabled and won't be able to discharge the duties as a managing director, then probably this payment never cannot go. Irrespective of the shareholder's appointment is there, if the tenure is there, if the person in between becomes disabled to the extent that cannot render the services as an MD, then of course the manager remuneration cannot be paid. But otherwise, if is able to give the guidance, carry it forward, then yes, irrespective of what the disablement is.
And also the
Here,
reference to the remuneration policy you have, that is also there. It's again depends on circumstances. There's a
Yeah.
based on the facts we can take. Yeah, Mr.
anyway,
Bhatt.
looking at this question, it is more of a hypothetical question rather.
Yeah,
That
yeah,
is what.
these are all hypothetical questions, sir.
And the second thing is, he is used to two words here. One is partially sick. When you say partially sick, always the company provide for the sick leave, company provide for this, all those things, etc. Still he is able to perform. Second thing is when you say permanently disabled in what capacity? That is the thing. Because as Sudhakar puts it very clearly, it is a contract with him for the employment. So long as the contract exists, both the side, people have to honor the contract. Because he is rendering a service, whether he is rendering a service or not, board to take a call. But as per the contract, he is supposed to receive the remuneration, that's all. Once the termination take place, only everything comes to the halt. Otherwise, it is not. In cases of the pending against defaulting director, is he eligible for remuneration? Cases are pending against
Yeah.
a defaulting director, is he eligible for remuneration?
Is there any
Definitely
definition
those
for defaulting director?
Yeah.
And similarly, defaulting for whom? In what way? These are all the questions. You have to say defaulting director, there is no definition.
I
It is
don't
an
know what
absconded
is
director, it is there.
I don't know what is actually in his mind.
Yeah.
Probably,
I
I
think
don't
he
know
is
whether
referring to that, we said ineligibility. In that it is the prosecution and he is adjudged as he is subject to penalty and all that. So
Until and unless the director attracts disqualification, we don't see a need to stop his remuneration.
pending cases and all the thing does not constitute anything unless until the outcome comes out of it. That is the thing. Always in the legal world, it is actually said, unless proved guilty, he is innocent.
Yeah.
So long as the outcome comes out, you cannot take a decision.
If he becomes a disqualified director, then that is a different thing. Otherwise, defaulting director, there is no definition.
Here, yes, next question start with the read example. If the profit is 50 lakhs and the company pays 20 lakhs and the MD exceeding the limit, will 50 lakhs will be treated as an inadequacy of the profit.
50 में से 20 दिया ना तो inadequacy क्यों होगा?
which company it is? Private company.
Inadequacy of profits means that you have a profit of 10 lakhs. That is inadequacy of profits. Here you got a profit of 5 lakhs and you are paying 20 lakhs. How can you say inadequacy of profits?
MD receives 5% of the net profit. Can NED receive 3% additionally? This we discussed actually. Can a promoter director vote on the own remuneration? That also we discussed. I think we are done with all the
Mr.
questions.
Bala, in current today's session, there are more questions.
Yeah, I'll go back.
At 12:06, or you can take Mr. Krishnan TS.
1 minute. I'll just go to 12, 11. Yeah.
Mr. Krishnan has asked explanation.
No, No, Mr. Krishnan has actually given the clarification. He actually produced the section 197, 198. He gave the explanation for that 11%. That I already read out actually.
Yeah.
In case of the provisional financial, then the disclosure in the Schedule 5, upfront will always safeguard in case of the adequacy post-audit. In case of provisional financial, then disclosure of the Schedule 5 upfront will always safeguard in case of the adequate. When you have the new labor codes, companies need to make the changes in the salary, breaking manager, permanent and other KMPs, which there may be a slight changes up or down. Can we do it in the shareholders' approval required? No, I really don't know. When you talk about the manager remuneration, you have to go by the definition, because this labor code talks about the take-home salary of 50% or something like that, which has to go for the retirement benefit, etc. I don't know what is that to do with this
So
here.
I
I'm
think
not very clear on this.
they may
Yeah.
be changing the composition of basic and all that. They must have given the remuneration composition differently. Now minimum 50% should go for deduction and all that, no? That's why they
Yeah.
may have to change the composition of or bifurcation of that salary. But their total remuneration or the remuneration payable is not crossing the limit. In that scenario, so internal remuneration, whether it require a approval of shareholders. That is the question. Because you mentioned basic, DA,
Yeah.
HA, HRA, all that maybe they must have. So whether it will require shareholders approval. If you are given the board some power to make, discuss, and you finally decide the limit, again the resolution is crucial. Sudhakar,
Under the
are you?
See, according to me, you have to see the resolution. What you have passed the resolution. If there is any change in the law and you are not in compliance with the law, you have to see that. You cannot just give an answer here, yes or no. That is not correct. You have to see the resolution, what you have
What you
in
have
the law. Accordingly, you have to.
under
Yeah.
income tax, we can carry forward the losses only up to 8 years. But while calculating the net profit as per section 198, we should consider last 8 years in unobservable losses, right? Now, this I think we discussed actually, because any balance sheet you take, unobservable also carried forward cumulative. Or
Well,
we need
income
to
tax is
deduct.
a different thing. Income tax is
Yeah.
different. They said for 8 years you can set off the losses. That
Correct.
is different. And financial statements, you are carry forwarding the losses in perpetuity. Till the
Yeah,
time you
that
earn the profits and write off the losses.
correct. You're right. In top 10 employees, provision is applicable to the private companies also. Yes, of course, it is applicable. Central government approval would be required, I think, for that case, 7 years promoter MD extension. I don't know what is this question refer to. Central government approval would be required, I think, for that case, 7 years promoter MD extension.
some question he is referring.
I don't know.
You cannot appoint any managerial person for beyond 5 years at one time. There is no question of appointment for 7 years.
Whether the listed company needs to obtain shareholders approval every year for payment of the commission to NED, or a blanket approval for all future years can be obtained. I am referring the requirement of regulation 76 of the LODR.
Every year, companies did not take approval, but yes, of course, proxies are insisting on it. That blanket approvals are also not working. So periodically, at least go and take the approval for payment of for the payment of commission. But
See, you can take a blanket approval. You see that
yeah, but
so it's a percentage of remuneration be paid to the executive directors and all. Unless until you want to change the decision, either to the you want to increase it or decrease it. If there is a step, continue with that.
so I'm referring to normal of the guidelines of the proxies, and we did face this one at one of our in my previous stints. I faced a similar kind of a situation. So then it was like, some companies which are very since incorporated since ages, like 50s, 60s and all. Those companies, they have just taken one-time commission approval and have never gone back. So there, and this could be even include some good large big corporates as well. So in that cases, preemptly the corporates have started taking, and when they are taking, they are not seeking a blanket approval. This is I'm saying from
Okay.
the proxies, because if we
Let you
try to put in
examine.
again an open-ended resolution, it is inviting a lot of proxies, concerns and questions on that. That it has
That
to
is a
be for a
different thing.
period.
See, validity of a resolution is until there are the changes are there in the law or in the intention of the management or of the shareholders.
I understand, but
So there
this
is no
has
time
been,
limit for the validity of a resolution.
yeah,
Okay.
yeah. So
So
the,
if you find that okay, 60 years before a resolution is passed, better to have a fresh approval and all, by all means you can do it. As a good governance point of view, you can do it.
yeah.
Change in the management is you may do it.
So
You
when
know,
we
all
put
these
forth
things.
this resolution nowadays, and if we try to seek a blanket approval, that is not sailing through. It requires, proxies are insisting, even if not required under law, to prescribe a time frame. 3 years, 4 years, 5 years max. They want this to be aligned in terms of the executive remuneration. And that is what this has been something which we also practically faced, and we had to prescribe the period therein. So, this is what something the proxy's expectation is, not written in the law, but the expectations of the proxies is what I'm saying.
So what you are addressing at the starting, that remuneration has been viewed differently now.
Yeah, yeah, exactly.
Yeah,
See,
Mr.
going to shareholders and getting their approval is not a simple thing. So you
Yeah.
have to see that, no doubt about it. I say governance point of view, you are not acquiring anything. This thing for every 5 years, I have to go to the shareholders. Shareholders may ask you, "Bhai, I have already given you the approval. What for you are coming to me again? What rationale we will give to them?"
But I think the shareholders are now asking deeper question, as what I stated earlier, that why you want a blanket approval and why
No, no,
not
but
for a
there
fixed
is no
period. Come
question of
back to us
blanket.
after a
No,
fixed
no, one
period.
minute,
We'll
one minute.
relook at
We
it.
are not, we are using this word blanket approval in a very loose manner. We are not saying any blanket approval. We are only getting the resolution. For example, if I am passing a resolution under 181C, I am passing that yes, I can borrow beyond my paid up capital, free reserves, and security premium up to a limit. That limit may be anything. You can take it. Okay, you may fix a particular amount, or you may say कि by that this much of this thing. Say for example, by 25% over and above my paid up capital, free reserves, and security premium, equivalent to that. So these are all the resolutions what we passed. For these kind of resolutions, I will not go to the shareholders time and again. So you cannot call it as a blanket approval. It is an approval from the shareholders. Certain approvals I will take it once I take it, period. I don't need to go to them again and again. Plus, in case of managerial remuneration, you are taking that for a person specific. So till the time that person is there, that 5 years or whatever it is, then again when we are appointing him a fresh, I have to take a fresh approval from the shareholders.
Sudhakar, 100% you are actually right. In case of the 1% commission payable to the NEDs, so long as we are within the limit, if the shareholders give the approval, that is more than sufficient. But on the contrary, they are actually fixing the quantum. Then in such a case, when the quantum varies, then only the approval will be called for. Otherwise, there is no way the approval is actually required to be called for.
Yeah, correct. Say for example, in case of NEDs, I may decide that 0.25% of my profits I will pay as a commission, up to 2.25%. And at one point of time, we decided that, okay, now let us increase that from 0.25 to 0.5. Then I have to go back to the shareholders. Otherwise, I cannot, I don't need to go to the shareholders again and again.
Correct. Absolutely, you're right. Absolutely, you're right. I agree with you.
Yeah, Mansi is also telling no need, but the proxy is insisting. So you are that
No,
is.
I'm saying, yeah, it is not required. But when some companies which are going back, and seeking the fresh approval, कि बहुत time हो गया, चलो, as a governance practice, NRC board recommends, we go back, we seek approval. At that point of time, you are not allowed to take blanket. आप अभी blanket नहीं ले सकते. वो proxies बहुत ज़्यादा, they are raising concerns. कि
So
no,
you are
it is,
talking about
yeah.
the current scenario that proxy
Current
found.
scenario I'm talking about. That now if you go to SIC, you have to keep the for a specified period.
Yeah, Mr.
One more clarity. In case we are actually fixing the remuneration for the next 3 years, and due to the condition of the 1 year, it is excess remuneration as per the time company is actually in the loss and tackle, can we just put a para in the beginning of the approval resolution that it will be the minimum remuneration given and no separate approval will be taken again. This is what I think Sudhakar discussed very elaborately, the way in which a resolution is to be actually worded, etc. That is what he actually discussed this actually.
Yeah, so basically you mentioned that in case of absence, this will be a counted minimum remuneration. That's it.
Correct. Correct. If the company decide not to appoint a promoter come CMD plus 70 years and to use this service as a professional capacity in nature, RPT in that situation can relative of that person will be called relative and relative of the person's vote in that related party transaction. Again, I will say go to the guidance notes because it is very explained. I will not answer here. Can we pay the sitting fees annual fixed amount irrespective of the number of meetings? No, sitting fees is always decided with a reference to a particular meeting. The number of meeting attended, number of sitting fees payable for that meeting. You cannot have the blank and what you call, once you use the word blanket, you cannot fix it. If the articles is authorized that the MD can act as a chairman. No, this we actually discussed. It is not the question. If the chairman, either you can have a permanent chairman or you can select the chairman, whatever it is. That is up to your company's policy.
It's a repeat question, labor code. You can take next.
Okay. When you have the new factory labor code, we talked about it. Can an independent director get professional fees under the section 188? 188.
We talk about Office of Place of Profit.
Office of pleasure.
Refer to 197(4).
Can the sitting fees paid to the fixed amount that we talked about it? I don't think the person is permanently disabled. He'll be able to do justice to the job. In that case, the director within the enhanced responsibility under a company's act. As the ethical practices, the director should be asked to resign by the board and he is updated. I think we discussed enough on this. That is a call, to take what disability, etc. It all depends upon case to case basis. Defaulting director, breach of trust, criminal negligence, gross negligence of duties, and does not think he will be entitled to remain, he can be dismissed. See, these are all again question of subject which is actually to be proved. When it is proved, if it is penalized, if it is penalty and other thing and all this thing will come to picture. Otherwise, there is nothing called a defaulting director or something like that. Clarification. To the question we discussed earlier where MD age exceeds 70 years. Respected panelists, could you please clarify what a role of these proxy advisory firms and they define they are actually regulation by these firms and the Companies Act or SEBI LODR regulation or these something borrowed from the Western countries.
Okay.
Proxy regulator are actually regulated by the SEBI LODR regulation. Basically, they are actually for the listed companies. They are actually working independent analysis, questioning the governance, various practices, remuneration, and related issues. That is what they are doing. It is regulated by the SEBI LODR. Although it is there in the overseas concept, yes, it is within our regulation, which is there. Regarding the regulations 17(6)(a) specifies NED remuneration approval every year if it exceeds 50% of the total remuneration payable to all NEDs. It means every year shareholder approval will be required. Yeah, of course it will be required. Yeah. I think that's all I had done with Dipti, all the questions.
Anyone wants to speak who has raised hand, Mr.
Yeah, that we can see here.
But it was from starting only, Mr. Bala. At the when
Okay.
session was not started at that time, so it's a by mistake. If anyone wants to,
any participant would like to interact with the panelists, they can raise the hands. Anyone? Anyone who want to put up a question, interact with the participant, please raise your hands, please.
I have only one submission to the participants who are there at this point of time, that whenever you attend any webinar, we are actually what's called as that sending the flyer about 3 to 4 days beforehand. And sometimes when we are conducting master classes, we are announcing much in advance. So when you attend the webinar, if you prepare for that and then attend, it will be helpful to you as well as to us. Same questions, some silly questions are there. They are unnecessarily time consuming and we are actually losing time in discussing the major issues. So please curtail yourself to opt that, whether some small questions where you can find the answers in the books itself. Only thing you have to take the pain of reading that, Majorly, these webinars are meant for any kind of interpretational issues are there, the panelists who are with their experience from inside or outside the firm, they will be able to explain to you in a better manner. If we are having, say, 100 questions, and out of the 100 questions, 55 questions are of very, what's called as, minimal questions, no interpretational issues are there. It is only a matter of fact. One has to take the pain to read it in the books. Then those questions are not to come. In fact, there should be some quality questions so that we will able to enjoy while answering those questions also and enrich our knowledge also while answering those questions.
I
Okay.
think that hand raising has also gone down. Prashant Kumar has put a hand, but he has actually put it down.
By mistake, yes, done instantly.
Yeah.
Yeah, I think there is no one who I think we have answered both the last session and the questions of this sessions also. With this, so we can end this session. Thanks a lot, Mansi, for your time and sharing your
Thank you.
experience.
Thank you, Dipti. Thank you, all the panelists. It was great interacting with you all.
Thanks, Archie, for an
And,
excellent presentation.
thanks.
It went for 2 weeks.
Mansi, my special appreciation to you. You excellently brought out the chart. You well explained the subject very nicely. That is one. Second thing is there, yes, no doubt, even if we see now around 150 people, even on the close hours, if we see the participants, that shows the importance of the topic and the people interest learning. I am
Absolutely.
really
Yeah.
highlighted to see the people, coming forward and learning the things. That is the very good tendency which I see with our young professional today. That's one. I think our profession is definitely will do well. With this, we end the session for this week. Thanks a lot to everybody. Mansi, of course, Dipti, Sudhagar, our own people only, I wanted to thanks at all. So that is the thing. With this, we close our session. We will meet next week at another session. Have a good weekend. Thank you.
Thank you.
you.
Thank you. Thank you
And
all.
everyone.
Thank you.